Wonderful good day, ladies and gentlemen, to the news show with Cyprium Mining today here at Commodity TV. Cyprium Mining announced that it has entered into a letter of intent with Minerales Nacionales de Mexico, Minera Potosi Silver and Daniel Valenzuela, pursuant to which Cyprium and the Potosi partners have agreed to form a 20-year joint venture for the exploitation and exploration of the Potosi silver mine located in the historic silver-rich mining district of Santa Eulalia in Mexico. The nature of the deposit in the Santa Eulalia district is a carbonate replacement deposit and is the historically largest of its type in Mexico. Mineralization occurs in an area about 10 kilometers in length and 5 kilometers in width. Production and reserves for the district have been estimated to be about 50 million metric tons with grades of 125 to 350 grams of silver, 2 to 8% lead and 3 to 12% zinc, along with appreciable quantities of tin and vanadium. Concurrently with the signing of the final documentation to form the joint venture will enter into a renewable 6-year commercial agreement pursuant to which it will sell and Trafigura, Mexico will purchase metals from the Potosi silver mine in accordance with the terms contained in the said commercial agreement. Juan Antonio Moran, commercial manager Mexico at Trafigura, said Trafigura is pleased to start working with Cyprium Mining in order to restart the Potosi silver mine. Our relationship with the mine goes back several years and we believe the mine still has good production and exploration potential. Cyprium Mining also announced the results from its initial phase of exploration at the Potosi silver mine. The underground exploration program consisted of 34 channel samples and had as its primary objective to audit past exploration results from over 500 samples taken in 2014 on levels 9 and 10 of the mine by an independent third party. The audit sampling included taking 25 duplicate samples of the 2014 program. Sampling in new areas was also conducted on levels 3 and 4 of the mine, where initial pilot production is planned. 9 samples were taken in this area. The sample audit consisted of 10 samples from level 9 and 15 samples from level 10. The 10 samples from level 9 gave a weighted average of 246 grams silver, 4.3% lead and 4.3% zinc over an average sample width of 1.12 meters. The 15 samples from level 10 yielded 78 grams of silver, 3.3% lead and 4.1% zinc over an average sample width of 1.16 meters. The sampling on levels 3 and 4 of the Potosi mine was completed in workings where initial pilot production is planned. 7 samples from level 4 yielded average values of 578 grams of silver, nearly 5% lead and nearly 3% zinc over an average sample width of 1.65 meters. And 2 samples from level 3 yielded averages of 100 grams silver, nearly 3% lead and over 8% zinc over 1.5 meters. The sampling was widely spaced and more systematic sampling will be needed to determine the expected grades of the pilot mining program. A more detailed description of this work is the subject of the NI 43-101 report currently in preparation. Alain Lambert, chairman and CEO of Cyprium Mining, stated, "Well, the results of this initial phase of exploration are consistent with expectations. These results will help our technical team design a more comprehensive exploration program, which we will undertake immediately following the closing of the joint venture announced in July. In the meantime, we are continuing negotiations with various contractors regarding the rehabilitation of shaft number 3 and 5, as well the mining of level 2 to 4 and 9 and 10. Our priority in these negotiations is to ensure that as much of our costs as possible are on a variable basis and that our capital expenditures in the short term are focused on production. While we believe in a healthy exploration budget, we remain committed to our stated goal of financing such exploration in great part from successful and profitable production." That was Alain Lambert, CEO and also chairman of Cyprium Mining. Ladies and gentlemen, Cyprium Mining is full on track, and we like that it worked now with Trafigura also together, which is a fantastic trading company here in Switzerland, the third largest I think really in the world. And it looks like that they are really on the path to growth, production and finally to cash flow. Thanks and bye-bye from Munich.